What is PIP? So PIP actually stands for PIP price interest point. It is a unit of measurement to show the value between two currencies. Show value between two currencies. So for example, let's say Australian dollar and USD. Price is 1.0235. If the price increases or decreases by 0.0001 is equal to 1 pip. So the last decimal point of the 4 decimal point is actually 1 pip. So right now here I see 5 pips. Okay, 5 pips, and this is 1 pip. So if the price of the AUD USD price is 1.0236, that means increase in 1 pip. Now what happens? What about our special currency yen? So the special currency yen, there is a different explanation to this. So for example, the USD JPY rate is 80.33, and if it goes if the new price is 80.34, then it is movement of 1.01 or 1 pip. So do note that even though this is actually movement of in 4 points, it is still it can be a movement of 100 pip movement, but since we only regard the Japanese yen up to 2 digits, the pip changes. And it still is 1 pip movement in the USD JPY. This is because the USD JPY, as we discussed in our previous module, is special. So in essence, a pip is the smallest change in value of any Forex currency quote. It can be 2 decimal places or 4 decimal places.